The crunch of the autumn leaves, your last chance for a winning year. The air gets crisp, the leaves turn a brilliant, fiery orange. For small business owners everywhere, a quiet panic starts to set in. It's the fourth quarter, it's the final sprint. This is the make or break season where the story of your entire year gets written. I remember a small coffee shop owner named Sarah. She had a great summer. Tourists were flocking in. Iced lattes were flying out the door. She felt like she was on top of the world. But as the first chilly winds of October blew in, so did a harsh reality. The tourist crowds vanished. Her daily sales dropped by half. She was facing a tough holiday season with no plan. Sarah's story is not unique. October, November, December. This isn't just about finishing strong. It's about setting the foundation for a healthy start to the next year. It's your last, best chance to look at your financial reality and make smart adjustments. You don't just want to survive the winter, you want to thrive. The good news, you are not powerless. You don't have to let the calendar dictate your fate. You can take control right now. Let's get one thing straight. The fall season is not the finish line. It is the final turn before the finish line. What you do here determines your momentum heading into the new year. Think of your business like a professional athlete. An athlete doesn't just stop trying in the last quarter of the game. That's when they dig deeper, focus harder, and execute their strategy with precision. This is when you look at the scoreboard, your financial statements, and make the crucial plays that will lead to a win. Ignoring your numbers now is like closing your eyes during the most critical part of the game. The biggest mental trap business owners fall into is thinking, it's too late to make a difference. This is a lie your tired, overworked brain tells you. The truth is, the fourth quarter is often the most malleable part of your financial year. You have 9 months of real, hard data to work with. You know what worked and what flopped. You have actual sales figures, not just hopeful projections from last January. This data is gold. It allows you to make incredibly smart, targeted decisions that can have an immediate and powerful impact on your bottom line. You have the power to change the outcome of your year right now. In January, your budget was a guess. You projected sales, you estimated expenses, and you hoped for the best. Now, in October, you have facts. Your budget can now transform from a work of fiction into a powerful non-fiction tool. It can become a roadmap based on the real terrain you've already covered. This allows you to pivot with intelligence. You can cut spending that didn't deliver results and double down on what actually brought in revenue. This is a strategic advantage, not a reason to give up. Trap number 1. Flying blind on autopilot. The mistake. Ignoring your actual spending versus your budget. It's like driving across the country using a map you drew in January without ever looking at the road signs. This leads to surprise cash shortages and missed opportunities. The fixes. 1. Do a 15-minute Q3 review. Pull up your bank statements. Pull up your credit card statements. July, August, September. Compare the totals to what you budgeted for those months. Just see the numbers. 2. Use conditional formatting. Create a rule that turns a cell red if your actual spending is more than 10% over budget. It's a simple visual alarm. The most common trap is simply not looking. You created a beautiful budget back in January, full of hope and ambition. Then life happened. A piece of equipment broke. A marketing campaign took off. And so did the ad spend. A slow month hit. Now, heading into Q4, your budget spreadsheet is sitting in a folder, gathering digital dust. You're flying the plane based on a flight plan from 9 months ago, completely ignoring the turbulence and weather changes you've flown through. This is how businesses run out of cash, even when they seem busy. The danger of this set it and forget it approach is that reality almost never matches the plan. Small deviations in spending add up. A little extra here, a little more there, and suddenly you're facing a massive cash flow gap in November. You're making decisions based on what you thought not what is. This disconnect is where financial disasters are born. Let's pull out of this nosedive. The fix is simpler than you think. Just take 15 minutes. Pull up your last 3 months. Don't judge, just observe. Trap number 2, the use it or lose it spending spree. The mistake, rushing to spend leftover budget money on non-essentials. The story. It's like emptying your pantry on the last day of the month just to say you used it all. The harm, this wastes cash on low-value purchases that don't help growth, leaving you vulnerable later. The fixes. 1. Apply the value filter. Before every purchase, ask, does this directly generate revenue or increase stability? If not, pause. Example, software that automates 3 hours a week. Yes. A faster computer for your designer. Yes. Example, decorative plants for the lobby. Probably not. 2. Sweep it to safety. Move leftover budget into a separate savings account. Label ideas, profit reserve, cash cushion, opportunity fund. Here comes a classic Q4 blunder. You look at a budget category and see $2,000 left. Office supplies, marketing. A little voice whispers, better spend it or you'll lose it. It's a leftover corporate habit. As a small business owner, this is insanity. That isn't the company's money, it's your money. Every unnecessary dollar is a dollar stolen from your profit. This spree buys things you don't need. Fancy espresso machine, new chairs, a conference you might not attend. The harm is immediate, converting flexible cash into less useful things. That cash could be a safety net for a slow January, seed money for Q1, or your profit distribution. Use the filter. Will this increase revenue or stability? If not, sweep it immediately out of operating. Profit reserve, cash cushion, opportunity fund. By moving the money, you remove temptation. That cash is now safe, waiting for a true strategic need, or better, to be taken as profit. The mistake is forgetting to set aside money for taxes and other year-end bills. It's like throwing a huge party all year and forgetting you have to pay the venue at the end of the night. The harm is a massive, stressful cash crunch in Q4 or Q1, forcing debt or draining operating funds. The fixes are simple. First, open a tax reserve account. Right now, open a separate savings account and label it tax. With every deposit or sale, immediately transfer 20-25% into that account. Don't touch it. Second, schedule a payables review. Put 30 minutes on your calendar to list big bills due before January 31st. Example, insurance premiums, annual software renewals, estimated taxes. The most terrifying budget monster, the surprise tax bill. Many owners run the business from the main checking account. A healthy-looking balance in October feels great, but it's a lie. A big chunk doesn't belong to you. It belongs to the government. Forgetting this is like eating the seed corn. You feel full today, but you'll starve tomorrow. Log in and open tax reserve. Every time you receive a payment, immediately transfer a percentage. Start with 20-25%. This is not your money. Don't spend it. It's held in trust for taxes. Block 30 minutes this week. Payables review. Scan calendar, software, and statements through January. Make a simple list with expense and due date. Now your cash is ready and waiting. Trap number 4. Riding summer's wave into a winter wipeout. The mistake. Assuming your busy season's sales pace will continue into your slow season. It's like a farmer expecting to harvest corn in a blizzard because autumn was so good. The harm. You overinvest in inventory, staff, marketing, leading to wasted money and dead stock when demand falls. The fix is reforecast Q4 sales. Look at last year's Q4. Use that, not summer, as your baseline. Project October, Project November, Project December. Be realistic. Based on your new forecast, adjust your 2 biggest variable expenses, marketing spend and inventory orders. Pause big campaigns, reduce purchase orders. Many businesses are seasonal. A landscaper is slammed in summer and quiet in winter. A retail shop might do 40% in November and December, The trap is falling in love with your busy season's numbers. Your brain thinks it's the new normal, so you keep hiring, ordering, and spending. You're driving 80 into a hairpin turn, failing to adjust for the changing terrain. Imagine a boutique that orders mountains of sweaters after a great summer. Warm autumn hits, no one buys. By winter, customers want holiday outfits, dead inventory, steep discounts. Your annual budget is irrelevant here. Build a micro forecast for Q4. Start with last year, adjust up for new clients or down for lost ones. Then pull the levers, inventory and marketing, to match the forecast. Work with the rhythm of your business, not against it. Trap number 5, the slow bleed of zombie subscriptions. The mistake, paying for subscriptions you no longer use or need. It's like having a gym membership in a city you moved away from 2 years ago. The harm, a silent drain where hundreds or thousands leak out yearly for zero benefit. The fixes, schedule a 30-minute subscription audit. Go through your last 3 months and highlight every recurring charge. For each subscription, cancel, downgrade, consolidate. Ask, do you still use it? If not, cancel. Use it less? Downgrade. 2 tools do the same job? Pick one. These zombies, monthly and annual software and services, keep billing long after you've stopped using them. Each charge seems small, 15 here, 49 there, death by 1,000 cuts. A single $25 monthly subscription costs $300 a year. 4 or 5 of these, over $1,000 gone. That's money for profitable marketing, better equipment, or paid to you as a dividend. Here's your mission. Block 30 minutes this week. Become a subscription detective. List every tool and cost. Then purge, cancel, downgrade, consolidate. Be ruthless. Every dollar you save is pure profit that drops to your bottom line. Trap number 6. Chasing ghosts of January's goals. The mistake, sticking to outdated goals that no longer match reality. It's like insisting on a chocolate cake recipe when all you have are lemons. The harm, you waste time, energy, and money, leading to frustration and burnout. The fixes, reset your top 3 goals. Based on your current reality, what are the 3 most important things you can accomplish by December 31st? Write them down. Be specific. Realign your budget. Does your budget support them? Shift funds away from old, irrelevant projects and toward these new, critical priorities. Back in January, you aimed to launch products, expand, and double social. Now it's October. Launch delayed, expansion too costly, social flat. The trap is to keep chasing these ghosts. This isn't defeat. It's smart, adaptive leadership. Ask, what are the top 3 most impactful things I can achieve by year end to set up a strong start next year? Maybe it's selling through existing inventory. Maybe it's solidifying relationships with your top 5 clients. Your budget is a tool to achieve goals. If goals change, budget must change. Cut failed channels, reallocate paused expansion funds, move resources to your new top 3. This ensures every dollar you spend from now until year end pushes you toward a clear, relevant, achievable target. As we've seen, the final quarter of the year doesn't have to be a time of stress and anxiety. It is a powerful opportunity. It's your chance to take everything you've learned over the past 9 months and put it into action. The biggest mistake is to view your budget as a rigid cage you built in January. It's not. A budget is a living, breathing tool. It's a compass that helps you navigate changing winds. If you're off course, you don't toss it. You adjust direction. That is what this fall budget review is all about. You don't have to fix everything at once. Feeling overwhelmed causes inaction. Instead, take one small action today. Start by just looking at your numbers, your actual income and expenses from the last quarter. That single act replaces fear with facts and clarity. Then, trim one zombie subscription and set up your tax reserve account. Reforecast your sales and align spending with reality. Each action puts you back in the driver's seat, from passenger to pilot. Profit isn't an end-of-year event. It's the result of small, smart decisions daily. Start now. Don't wait for November or January. The clarity you gain in the next weeks will impact your peace of mind and your bank balance on December 31st. Budgets aren't static, they're living tools. Start with your actuals, trim waste, and protect your cash flow. Your future self and your accountant will thank you. Ready to take action? Download your fall budget review checklist. Watch next. Budget versus reality. Review your 2025 spending before year end.